Good evening, I'm Giuseppe Basile. I'm the analyst and mentor you can find at the website www.fibstalkertrading.com. I also post regularly on Twitter using the Fibstalker nickname. I also run a blog. You can find it at fibstalker.com. In this video, I'm going to review for you the 12 plus 1 markets I follow, and this video goes to my newsletter subscribers. If you want to receive the video, just subscribe to my newsletter. You can do that on the blog and on the website as well. So let's start from the euro quickly. As you know, the euro is actually has been trading on a sequence of move lower on the larger time frame, the weekly time frame. We had participation in this 139.70, which pushed price in the last few months since May of 2014, and we have a first target here at 109 level. And are we going to get there? We don't know how, but I believe we are going to get there eventually. Now, this market, when we look at the daily time frame, we saw that we had a participation on the downside from this anchor. This anchor was identified after the fact, and I call this price discovery. It does not import It's not important if we cannot trade these levels. Once identified, it means that algorithms are actually acting on them. So on the other hand, we had a very clear sequence of measure move on the upside, and this gives us the opportunity to study the sequence, and if and when it fails, that's going to give us an opportunity to time any entry points on the short side. So I believe this market is due for a continuation lower, just a matter of how we are going to get there. So this market, after testing the level, came to again trade the long all the way back, found participation a number of times. Again on Friday, found participation, and there is the possibility for this market to keep pushing higher this price again into that 115. If that's the case, we are going to study the sequence of measure move on the smaller time frame. If that fails, we apply the Fib stalking timing technique, a proprietary procedural technique that helps you to test this important level of anticipated participation from program trading. So for this week, there is a real possibility for this market to just continue higher into 115.30 again, and we will see what happens there. Moving to the SP500, congratulations to those who follow my last two signals here. The first signal was on the weekly here, and I remember that's a nice memory here. I've been invited to talk at the Money show in Toronto last year. It was October, and I went to follow another speech, another meeting, and at some point there was a money manager who was talking about being in safety mode, alarm mode here, and the market was actually moving lower here. And he asked the audience whether there was anyone who knew what was going on the SP500, and I was the only one raising my hand, and of course everybody laughed at me. But I had this 1832 at the time on the contract at the time. This is a continuous contract for SP500, and I said, later on I said, well, there is a level that I've identified, and we will need to see how it behaves, the market behaves there. And of course, we this level was identified with 3 to 4 weeks in advance here, and by studying the sequence of measure move lower here, we could actually identify the level where the participation on the upside was confirmed, and this could be done before the fact. So as you can see, price participated on the downside on this 90.80 here, bringing price into the first and second target, and then once the reaction from that level that I showed you before, 1832, won that 61.8% level. That was our indication to enter. And of course, as I'm going to show you on the weekly time frame here, price eventually after a number of weeks here went to the first target, and this is an extension, so there is the potential for price to get into the second target as well. Where that second target is I'm going to show it to you, as this is going to be something that it's above, and those who follow my work know that I'm looking for price to get into 2234 here, and probably SP500 completing this cycle around 2500, which would be a larger target of the setup we had in 2009. So every 2009. So this is what we are seeing in this market, and of course we are also capable of identifying on the daily time frame well in advance another important level, and that again it was identified with 1, 2, 3, 4, 5, 6 days in advance. And you can review my videos as well if you like. I gave these levels well in advance, and once again market gets into these levels, we study the sequence of measure move, and this level was participated and never retested, and price now is moving into the 2120. That's the next stop for this market. Let's look very quickly at the dollar index. The dollar index has been moving laterally. Again, we identified this anchor after the fact, after price actually tested this level, then it was retested again. So this price is moving laterally on top of a level of support, the 93.70 here, and if we move below the 93.16, we might see a larger retrace higher in the euro as well, but that's not seem to be the case at the moment. If we retest this level, and again there is participation on the upside in the dollar, that's where we're going to see this market moving to. So gold has been as confirmed now a lateral move on top of support again, and those who follow me know that I've been looking at this market and modeling the sequence of measure move lower, 1252 here, participate on the downside into the 1146, and then after that the next measure move failed, showing that um, the bears were not interested in keep pushing this price lower. And once that happened, we saw that violation here, 1 pip is enough, price went back, and then started moving higher. This market did not move in a very technical way, which is showing that it's being pushed higher by smaller time frame. And when we saw this violation here, I mentioned that this move higher would have been pushed by a smaller time frame. I mentioned that the market could reverse at the first or the second target. The market reversed right at that second target, and again, now it actually pierced the shorts, and now the shorts on the larger time frame are not interested in pushing this price lower. But recently what happened, actually last week, what happened is that longs are also not able to support this price. So this market is moving laterally on top of area of potential support here, the 1230 level, and this movement is going to continue laterally, and as soon as the sequence of measure move fails here, we're going to see another move higher. I want to remind also you, I made this study and presented it in one webinar at fxstreet.com that the gold is actually moving at the moment in the last 2-3 years consistently and coherently with the ECB balance sheet. Now, the reason why that is happening, it's not known, but that's how gold is moving. Okay, so this is it for gold. Moving to the US dollars, Japanese yen. We know that This market has been very technical, very good to us. Please review the fundamental and technical review I did. I published back in August the 1st. Just look for Japanese economy and fssuite.com and you'll find my report. Price participated this 94 level and then went into the first and second target. So we know at the moment that the weekly is kind of neutral here, and the weekly is waiting to test this 1280 level. The weekly is not involved in this market until that level is tested. And so far this market has been testing, on the other hand, a daily extension long, and as you can see that has been tested clearly, this 116 level here twice. And if the price continue lower, there is the possibility for this level to be tested again. Remember, the weekly is neutral in this market, and there is a possibility for this market to retest lows. One of the reasons for that is there was no test of longs here, and as you can see, price did not come into this 118.16, but on the other hand, shorts have traded, as you can see here, shorts have traded before. So there was participation in this 119.35, and that's the way we perform our price discovery here. So there is price being pushed lower here before it got participation on the upside, so there is a possibility for this market to get back into 118, and this market is moving laterally on top of that daily level of support. If price continues to move lower and retest this level and then breaks to 114.57, we're going to go into 112.80. Moving to the euro versus the Japanese yen, this market is due for a larger correction, and it's only now correcting laterally for some time here. Some people would look at this as probably will look at this as a flag here. I don't look at the market like that. I look at the market, there has to be, the way I look at it is that there has to be participation from algorithms here, and I will, probably recommend or suggest or anyway consider to get short here once and if price gets into that 137.61. Why is that? Because this market actually is due for a larger correction, I believe, and the reason for that is this market has failed the next sequence in the next measure move in the sequence here when it failed this level here, and that means that this move lower is probably going to meet that level that I showed you before, and that's where we're going to see participation again into basically this 122 level. So that is going to be a great trade here in the forming, and you have to be very aware here that there's a good opportunity shorting 137.64 and buy back basically at 122. Moving to the pound versus the Japanese yen, this market as well is due for a continued correction here. That's not what it looks like, but the next level of participation along on the weekly time frame is going to be this 173.30. It's not going to come before, and also we have to remember that this market has already shown participation on the downside. It's now retesting that 184.19 again, and that could be an opportunity to short this market, actually to short this market again. That area is also an area of participation on the short side that we can see clearly on the daily here. 61.8% level has not even been tested and of course has not pierced here, and there is the possibility for this market to just now resume the move lower into that 173.20. So there are very good opportunities here on the pound versus Japanese yen as well. Moving to the euro versus the Canadian dollar, This market has been technical, moving laterally for some time, but we knew that, and I mentioned that May, at the end of May last year, I did an interview for USDCAD, and I mentioned the fact that before we could see some start of a move higher here, we would need to see the 138 60 being tested here, and that eventually happened at the beginning of the year, actually 6 months later. And and actually, so I invite you to check that video as well. And this market is actually now participating, as retested for the third time this level here, stopping out after a freeze trade here 3 times. But again, you don't have to get discouraged, and that's because that's the way the market works. And now there is the possibility for market to be pushed into this 146.65 level again, and we will need to see how price will behave when we get there. It's not a case that that first target lines up with the old halfway back where we could find participation on the downside. So we're going to see how algorithms want to play this market, and this is going to be very clear very soon there. Moving to the pound versus the US dollar, we know that this market has been battered down here, but if you miss that, this market has actually found participation to and within this area of potential participation long. This is identified tracing from lows to highs here, and whenever the sequence of measure move breaks within this an area of potential participation, that's an indication of a change in trend and participation on the long side. That was confirmed once we saw algorithm not being able to keep pushing this price lower. And so when price pierced that 153.48, there was an opportunity to enter this market on an extension long, and this market continued moving higher here since then, hit the first target, some profit taking, and is now headed towards that second target. And if that's the case, then this market is going to change it's the way it moves, so where this market can go. Of course, this move was very aggressive, so I'm gonna use an anchor here, and if you when you follow my if you decide to take my coaching program, you understand where these levels are coming from, and why algorithms use this level. So if this market continues higher, and remember that the pound versus US dollar will be anyway linked to the euro, so you have to consider that as well. If this price continues higher, 159.58 might be the level where we could see a reversal. The sequence of measure move fails anyway. Now we have this market getting to the second target. If this continued sequence of measure move fails, that will be anyway the time where we should get involved on the short side again. Moving to the Australian dollar versus US dollar, we know this market has been hovering around the second target. This second target, I'm going to show that second target to you again. I will also remove this area here. Those who follow me know that we identified a level of participation short 197.40, which brought price after almost 1 year, brought price to the first target, and then 1 year and a half almost in the second target. And we saw market hovering for a number of weeks here around this second target. We know that markets cannot make it very much below that level, because program trading will take profits, and that's what's going on. And now there is the possibility for this market to rally all the way into that 82 36, and then I don't see this market continuing higher at this stage. This market has to, um, although it could, uh, we will need to see how that market behaves when we get into that level of potential resistance, and that market after the last move could actually well respond to this 82.56 for another trade into this area of support here. Now, this market actually reacted at these levels not because, I mean, it might be, we don't know the real reason. One of the reasons is definitely profit taking from that target, second target I showed you before. But this market is also within this area of potential participation long, so we don't know which of the two causes it's working at the moment. Moving to the US dollar versus Canadian dollar, this market has been very aggressive, and those who follow me know that at some point we were capable of modeling the move higher as an extension from this notable anchor to highs, and price kept moving higher well above that second target, and we and went into testing that 126.22 that I mentioned with a few weeks in advance. We knew that that level was there since some time, and this market has been correcting for 2 weeks, and then last week has been a long a positive week, and there is a possibility for this market to retest again the the 50% level there. So one thing I would definitely, and that 50% appears to line up also with the 50% short here that we can see on the daily time frame. So if the market actually reverses at this 125.76, that would be a good opportunity to to enter short. And of course, we can always study the sequence of measure move on the for our time frames here and lower time frames as well, because we know that this measure move appears on all time frames, and as we can see here, this is a failed measure move, so there is a very high probability of price actually failing at the 50% level here. So that's something that my students who know how to study price structure and price discovery, these are considerations they are able to do. If you follow, if you decide to take my Stalker Methods coaching program, that's the kind of things that you're going to learn in that program. So watch this 125.80 level. That could be a level of potential participation on on the downside. Moving to the New Zealand dollar versus the US dollar here, and I want to get to the weekly here. Now the weekly, we know that this market pierced the all the way halfway back, and this market could be testing at the moment the 50% level from recent highs here, and we saw participation there last week, and so far this week we are seeing a continued participation. It's possible for this market to come back all the way into the all the way halfway back here. Let's see at how this market behaved, and as you can see, this 50% level has been tested, and market actually tested this 173.12, progressing to the first target, and this market could actually continue into the second target. We saw that it's on the weekly. I showed you that is actually trading this area of potential resistance here and participation on the downside, but this will only be confirmed if and when this 0.7412 is placed on the downside. So at the moment there is a possibility for this market to continue higher by correcting into 0.7443 and then continuing higher. If that happens, there's a possibility for this market to correct even more, and the higher I see this market, for me it would be this low to lows here. So if this market continues higher, that 177.89 is going to be the level where we could see the definite participation on the downside. Finally, I want to close with the US dollar, the Swiss franc here. This market has been, of course, battered after the Swiss central bank has actually removed the peg with the euro, and we saw this, one day move lower. Of course, the price just um, opened much lower here, causing a lot of distress in the forex market. And then, as you can see here, this market has participated into an area of ambush here. Ambush is a very important type of trade. Of course, we never trade it blindly. We need to see as a break of a sequence of measure move that happened, level retested, and then broke price 800 pips higher here into 093.45. This area of potential participation short is still active. We saw that strong move on Friday, and you need to study the sequence of measure move higher here. And if that fails, that could be a confirmation of participation on the short side, and that would be active until we stay below that 095.56. And this is it for this weekend review. I hope you enjoyed this review. I hope this is useful to you. If you want to receive information about my coaching program, the Fibstalker Methods coaching program, you can write to me at fibstalker@gmail.com or visit me at www.fibstalkertrading.com. If you want to receive this newsletter every Sunday, just go to fibstalker.com, and actually you can subscribe to the newsletter. I'll be very happy to send this to you. Thank you very much, and have a great trading and non-trading week. Bye bye now.